Yes, sir. It's your boy B Hayes. We back with another one, guys. So get ready because the Feds just did this, guys. In our last video, I just gave you guys a rundown exactly what should be expected to happen, and tell you guys, regardless of kind of what happened, the market is about to do what the market is about to do, guys. That's why ahead of all this even happening, the Feds already came out prior, letting us know early on that they could be less aggressive in the future with hiking interest rates, and that's exactly what's taking place, guys. For one, for starters, we already did what was expected. I told you guys this morning the market was selling off, falling like a bat out of hell early this morning because it was already building anticipation of what the Feds already put out there. They said they was expected to raise rates by 75 basis points. It fell in line with exactly that. That's exactly what took place. So the market already priced in what the hell they was talking about before they even came out and stated it. So now that's why people be left confused. Like, man, what the world? The market fell. They ain't say nothing about the rates yet. And then as soon as they do actually have another big rate hike, the market starts to go up. They left confused, and that's exactly why you confused, guys, because the price section be already pricing in the anticipation of news, catalysts, earnings, and all this stuff before it happened. Usually earnings sometimes, let me hold and pause my words, sometimes 9 times out of 10, earnings usually happen right after those. Like sometimes we see companies report bad earnings or not so good earnings to where it didn't beat Wall Street expectations, and it won't even that bad. Like we seen Google, Amazon, Snapchat, like how they just fell on earnings day right after it was reported and only missing it by a slightest bit. So of course, their earnings, it's like going to happen in a sudden instant. That's why it's always good to play earnings winner. Play it small with options. Either you're going to win big, you're going to take a small loss whenever you play earnings stocks, because they're going to move. It's a lot of implied volatility making them move drastically in one direction or the other. So long as you're on the right side of the stick, you can make buttloads of money. But anyways, let's go ahead and take a further look at what's going on, guys, because everybody was waiting on this. It all is happening now. And now we could go ahead and look forward to the rest of this good month that November is about to print a whole lot of money. So let's go ahead and take a look. Dow jumps 300 points. Stocks rally after the Feds fire off fourth jumbo rate hike. So as we know, the Feds doing this for the fourth time. We have a few more rate hikes that's coming. We got another one in December. I'm pretty sure they're going to do some more in 2023, a few more before they come down into a standstill and slow down on raising rates, guys, because they're not just going to continue to do this forever. So if we take a look at it right here, we see that while investors were widely anticipating the fourth straight jumbo rate increase from the Fed, they also have been warming to the idea that Chairman Jerome Powell might be willing to deliver a smaller rate increase in December, particularly with stocks and bonds awash in losses this year, and with the U.S. housing market dramatic pullback in the face of a 7% fixed rate 30-year mortgage. So as we know, guys, they were giving indication that they could possibly slow down with raising interest rates in the upcoming. Right here, if we go, the Fed said in its formal statement that it expected ongoing rate hikes. It also acknowledged that higher rates often impact demand and inflation on the lag. That means the Fed understand that the rate of inflation could soon decline enough for the central bank to slow down the pace of rate hikes fairly soon. The Feds emphasized that it would depend on incoming economic data, phraseology that often signals to the market that it isn't hell-bent on racketing rates higher with no regard for inflation signals. So this is the Fed's way of telling us that a slowdown in the pace of future hikes is upon us. So as we know, guys, the Feds basically put it in the cake, letting us know that they about to be less aggressive. And we already know in returns what this is going to do for the market. Like I told you, they was building a narrative before it even happened, because they already knew the market was about to blow with or without them anyway. So it's best for the Feds to always seem in. They is in control majority of the time, but even when they're not in control, they make it seem as if they're still in control. Make it make sense. So that's why they go ahead and put their news out that they're going to be less aggressive, because they know in return, when the market starts soaring, the news articles and the narrative will come out that the only reason the market is doing what it's doing because the Fed said they will be less aggressive on tightening monetary policies and tightening balance sheets, and less aggressive on interest rates hiking. So as you know, guys, there you go. You already know what to do. As you go on Instagram at the B Hayes Show, get in VIP, because the plays is about to be coming, guys. So you already know. I love y'all. We out, and God bless you.